Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
Bedford's cost segregation specializes in generating significant tax savings via their engineering-based studies for commercial real estate clients nationwide. Founded in 2002, Bedford is one of the largest independently owned cost segregation providers in the country, with over 14,000 studies completed to date in multiple offices throughout. The most important decision ownership can make when incorporating cost segregation within their real estate portfolio is selecting the right provider. With only 43 certified cost segregation professionals nationwide, Bedford is proud to employ 8 of them and takes the quality of their people as seriously as their studies. Every certified cost segregation professional has passed a rigorous test combining knowledge of technical engineering issues, legal tax issues, ethics standards, and requires a strict level of prior work experience to be eligible. Bottom line, not all cost segregation providers are created equal. So be sure to take the decision seriously from the beginning to protect yourself for years to come. Please contact Bedford's Business Development Director, Frank Judici, to learn more. This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Michael Flight. Thanks for being on the show, Michael.
Thank you for inviting me, Whitney. Really appreciate you being here and talking to you.
Yeah, I look forward to this conversation. Pleasure to meet you. I've seen you all over the internet as well, and grateful to have a conversation. But Michael's a founding principal of Concordia Realty Corporation in 1990, and more recently CEO of the Liberty Real Estate Fund, LLC, the world's first net lease security token fund. Michael is a real estate entrepreneur and security token evangelist who is an expert in shopping centers and net lease commercial real estate investment and real estate on the blockchain. Michael has been elected to public service and also serves on the real estate investment advisory boards of 2 nonprofits and is a founding board member for Freedom of Life, a Romanian NGO helping women achieve a liberty and build new lives while recovering from human trafficking. That's incredible. Thanks for serving in that way, Michael. And I, we had another guest just recently mention, how they are supporting a nonprofit that helps, end human trafficking, and it is definitely a cause. Or we talked about it on the show. It's definitely a cause that it's not talked about enough, right? It's something that's happening at such a big scale, and we're just kind of blind to it. It seems, and so I appreciate you giving back in that way. Why don't you give us just a couple minute overview of what you've been up to, since 1990, and I want to get up to, today, and just obviously the security token fund and some of that stuff, because I know that's new stuff to our listeners, and so I want to hear about what you're doing in that space.
Yeah, well, starting in 1990, we founded Concordia Realty, and we primarily specialized in shopping centers and shopping center redevelopment. And with that, those properties are triple net properties. Through the years, we've partnered with many institutional investors, including insurance companies, publicly traded real estate investment trusts, hedge funds, and a number of private equity groups. So what we were doing, what I like to describe is initially we were flipping houses on a giant scale. So instead of we would buy a rundown property, including something as big as a 900,000 square foot mall, empty it out, re-tenant it, do all sorts of things and build something new. So that was our model. We were heavy value add. And then we started buying portfolios of net lease properties. And through that, I could see the way the industry was moving from interior enclosed malls to strip centers to a lot of tenants want a freestanding triple net lease building because it gives them huge brand, huge impact, and they get more control over their building versus being in the middle of a shopping center. So that's kind of my background. I've been doing it for years and years and years, and I like to tell people that I probably haven't had every problem go wrong, but I've had a lot of them go wrong. So I'm not going to panic when something does go bad. So.
No, that's a key to success right there. And, not panicking when something does go wrong, expecting like things are going to go wrong. Right. Now though you have, a security token evangelist, I want to jump into that. And I want you to be able to explain a little bit about like, what is that? I think a lot of people have probably not heard of that before. You started a fund around this as well. And so I want to hear about that, what that is, what this means for your, real estate deals.
Well, evangelist means bringing the good news. And what we're trying to do is bring the good news of security tokens. And so security tokens are, like, for example, our fund, to best describe it, it's a Regulation D 506C fund. So security tokens are regulated securities, and they're regulated in the exact same way that a normal syndication would be regulated, with the extra option that the token itself rides on the blockchain, which is the same financial rails that cryptocurrencies ride on. So what's really cool is the SEC has pretty much put together some rules about investing in these, and as long as it's a regulated security token, it's for accredited investors. But after a 1 year lockup period for U.S. investors, those accredited investors can then trade that to any investor and not necessarily an accredited investor. So it is a combination of syndication, crowdfunding, and for lack of a better word, cryptocurrency, but it is definitely not cryptocurrency.
So it's not cryptocurrency. What's the difference there?
Cryptocurrency is unregulated, and a lot of cryptocurrency, some of them are store of value, some of them are meant to be money, so you can transfer value back and forth. And some of them, like Ethereum, is kind of a money, but kind of a giant software project. So a lot of the cryptocurrencies were just a way to raise money for software projects, versus security tokens, which are based on assets. So you can do a security token on equity, you can do a security token on debt. We've had people, because we run a meetup called the Chicago Blockchain Real Estate Collective, and we've had guys on there that are tokenizing a whiskey fund. So it's really cool. They're doing it exactly the same way that you would do a normal syndication, but they're tokenizing the whiskey for selling it in 5 years because the value of the whiskey increases as it ages. So there's all kinds of things. We've also had on our meetup, and this is all online, you can go see it, some guys that tokenized a Dominican resort. So it's in the Dominican islands, and they tokenized the resort. It was a triple net lease because it was fully leased out to one corporation. But what was really cool about that, it was not available to U.S. investors. But what was really cool about it is that for the non-U.S. investors that had invested in this deal, they could actually also qualify for Dominican Republic citizenship. So there's a bunch of things that we really like about security tokens. The other thing is that it's an international phenomena. So that somebody can be in the middle of Austria, somebody can be in the middle of Singapore or Hong Kong or somewhere else in Asia, and they can invest in prime U.S. real estate. There's deals right now that are out there in London, England. It's really going to open up huge pools of capital. And what we really like is that over the past 30 years, billions of people have come out of abject poverty into the middle class, and they're going to need a place to invest that. So as the technology gets better, people are going to be able to invest in smaller and smaller increments.
Nice. Well, I wanted to back up too just a little bit and talk and let you explain about a token. Like, who has tokens? How do we get tokens? People that are listening to this thinking, what are they talking about? What is that? And is that the same as a dollar? I know it's not, but I'm just saying, somebody that's listening that haven't heard of that before.
Okay, so if your listeners are used to it, I assume they are because you've done such a good job of educating them on a syndication. The token just represents a share of the syndication. So it'd be like if you and I decided to buy a house to rent out, and let's say it was in Memphis, Tennessee, and we were going to buy it for $100,000. You and I decide we're each going to put in $10,000. So that's, two tokens worth $10,000, and we tokenize it, at $10,000 a piece. So we could have 8 other investors investing in that house with us. So the token is just a share, but the token also, like I said, is within it, it's something connected to a blockchain, which is a distributed ledger. And the blockchain, it's connected by a smart contract. So we do our PPM and everything else. We agree on how we're going to split up the proceeds of the profits and all the rest of it. And that gets coded into the smart contract. So then when the property is rented out and starts, paying monthly cash flow, those payments go directly through the smart contract. So you and I, you could be there in Virginia. I could be here in the Chicago area, and we could have investors over in like Chile or something like that. And they could be receiving their payments, and they wouldn't even need to have a US bank or anything like that, because their payments could be paid directly to what's called a digital wallet. And so they could just be receiving their money, and they're outside the banking system. So it's really super cool. And then the other thing, and then I know you've got another question. You could also receive your payments not only in dollars, but you could decide to receive your payments in a stable coin, which is tied to the value of the US dollar, or you could receive your payments in Ethereum.
Yeah, I've got lots of questions, right? Not enough to get, to that we can even get to them all today, but I read a little bit about blockchain not too long ago. And just so I'm clear, I'm thinking about this correctly. I mean, it's like all these computers that can talk, right? And they're all ensuring that they're all accurate. And it's like it's almost, or maybe some people claim it's impossible to defraud it because there's like so many different systems that are connected that are always ensuring that it's accurate. Is that?
Well, blockchain is similar to the internet. So the internet was originally designed so that one point of failure couldn't bring down the whole internet. So if, one part, like let's say a few years ago in the Chicago area, some contractors broke in and busted the main link for AT&T's, fiber optics. And so it put down the internet, but all that stuff just got routed around. The same thing is the blockchain is a distributed ledger, which is just a giant spreadsheet. And then if you see that the giant spreadsheet, people can make, entries into that spreadsheet. And every time an entry is made into that spreadsheet, all the rest of the nodes throughout the world, they're called nodes, or they're basically just computers on the network, confirm that. And so once that's confirmed, it's like I've heard it called fly in amber. So you know how they find amber from the dinosaurs, and there's a little fly in there that's been around for millions of years. So once it's in the blockchain, that's in there, and you can't go back and re-record it because all the rest of the computers have to have consensus and agree that is the way it is. So it's a highly trusted thing because there is no central point of failure. You and I can't go in and change it.
Awesome. Well, tell me on the syndicator side, some benefits of like having a fund that's, open to tokens. I mean, like, how does that work as far as the operator? Why would you have a fund like that?
We believe that the future of most syndications, eventually when the cost comes down and the technology keeps getting better and better, most syndicators are going to want to do this because it gives their investors extra options. And so we believe that at some point investors are going to say, I want this. Can you guys do this for me? So what we're looking for was a better way for investors to have an experience. And so one of the things that I always bring up is my mother invested in actually my father, right before he passed away in 1985 or 1985, invested in a syndication. And my mother's never been able to get out of that. And the thing is still going. It's never made any money, and she can't get her money back. And so for, close to 35 years, she's been stuck in a bad syndication with a bad syndicator. This gives the opportunity for liquidity for the investors. But the other great thing is that we believe this is going to open up worldwide pools of access to capital so that more people are going to learn about, how great U.S. real estate is. And they're going to want to invest in U.S. real estate because it's one of the most stable forms of assets in the world. So we believe that that's going to open up, new capital raising opportunity. And we really do believe that at some point, it's going to be good for us because we as the syndicator and the managing partner can, because of the smart contract, takes care of a lot of the distributions and tallies up the pro rata and automatically, it keeps track of who's in what's called your capitalization table or your equity table. It helps with, it's going to streamline processes for doing this type of stuff. So we believe it's going to make it easier, more efficient to raise capital. It's going to open up more access to worldwide capital, and it's going to be easier to maintain and provide a better investor experience for your investors.
Yeah, and that's what we're all trying to do, right? Is how can we do that better? How can we provide that better experience for more investors? Being more liquid, it would be a major plus, no doubt about it. Investors would love that option. And then being open to worldwide. That's an incredible thought. They don't have to think about creating a U.S. entity or the tax issues and those things. That's pretty amazing right there. How does someone like yourself learn how to do this so it? So you're doing it legally, you're doing it correctly, to add this, to bring a fund like this into the U.S. and part of your own deals?
Well, I can tell you that I am a pure real estate guy. And so I've had a lot of technology guys who also are in real estate and doing real estate syndication. And the funniest one was when Pancham said to me, he goes, "I'm amazed that you're doing this." I'm like, "What? I don't know anything about technology." And But no, I learned about it because I had a lot of friends that were doing things in blockchain, doing things in cryptocurrency. And through one of the guys that works for me, we actually met some guys that were doing what's called an ICO, which would be illegal in the United States. It's an initial coin offering. And they were doing it for hotels and Airbnb properties. And I took a look at their white paper and it was just horrible. And I'm like, these guys don't know anything about real estate. And these guys don't know what they're doing. But I think they're onto something here because I think that, if you could do this. So we went through the long learning process, and it's been, 2.5 to 3 years of figuring out you can't do an ICO. You have to do a security token offering, and interviewing and vetting many different service providers, because there's also, since it's a new industry, there's a lot of people that say they do the technology part of it, and they actually don't do it. So we've had to vet them out, and, we've learned a lot along the way. And as I've told you before, we've also made a lot of mistakes and it's cost us quite a lot of money to actually figure out how to do it legally, but we're ready. We'll be ready to launch in early April now, finally, for the U.S. side of the token. And then later on in May or June for the international side of the token.
Incredible. Who's the ideal investor for this type of fund?
I think it would be good for any investor. Now, our particular investor is what's called a Core Plus fund. We invest in only single tenant net lease assets. These assets are some of the most stable, some of the most secure, and some of the best income producing assets available. They're guaranteed by major corporations. They're long-term leases, and the tenants actually pay all the expenses. So you don't have a risk that your expenses, your real estate taxes are going to go crazy, or the tenant's going to leave the water on and you're going to have to pay a water bill. That's all taken care of with the triple net leases. We like to describe them as bonds wrapped in real estate. So I like to explain to investors that if they're investing in one, and I believe you do value add multifamily, correct?
That's correct.
Yeah. So I would liken value add multifamily to a growth stock. They're investing in something they might not get immediate cash flow. They might have to wait a little bit for their cash flow, and they might have to wait for a pop in their cash flow while you exercise on your renovation plan and re-tenanting plan. With this is like the bonds of real estate. The cash flow is immediate. The tenant is in there paying rent. And also, if you look at the occupancy, historical occupancy, these have been some of the highest historical occupancy out of all asset classes. So it's a slightly lower return than you would get in a value add multifamily or something like that. But it is a dependable return. And it's basically, if somebody's looking for income, and if you were looking at like maybe investing in a bond or something, this would be a much better deal for you, because you not only get the benefits of real estate, but you also get the benefits. It's a K1, so you get the benefit of depreciation. You get the benefit of a tangible asset. And as I said before, we like to call them bonds wrapped in real estate, because they're just such a great thing. And what we're doing is we're making a diversified portfolio so that it's going to be geographically diversified, industry diversified, and diversified by credit of the tenants. So
nice.
Our ideal investor is somebody that's looking for income, or somebody that's looking to diversify their portfolio a little bit, that they don't want to be loaded up all in one asset class.
What's the risks the investor needs to know about when they're looking at a token fund like this?
The risks are that, we could have some issues with, the blockchain or the service provider, which we've vetted and gone with the best type of service provider. But the risks are also the same thing as you would have with any sponsor. So you would want to underwrite the sponsor. You would want to know who you're investing with, and you'd want to make sure that somebody, beyond all the glitz and glamour of technology, that the person actually knows how to operate the real estate. So that would be, first and foremost. And as I said before, there are some other risks, but the benefit of the token is that within 1 year, if things aren't working out, you have the potential to get out of it, versus if you were in one of our other shopping center syndications, you might be stuck with us for a while. And so that could be good or that could be bad, but you might have other life events that you need to do. And one additional thing, and then, I know you're pressed for time. What's really cool is we just did an agreement with a company out of Austin, Texas called BlockFi. And BlockFi not only acts as a bank where you could deposit your tokens in and then collect additional interest on top of those tokens, but you could also get liquidity without selling your. So, for example, if you were in a typical syndication, it would be hard pressed to borrow against your syndication share. With these tokens, you could deposit them with BlockFi and then borrow against the tokens to get some liquidity if you just needed cash right away and thought you could pay it back.
How does an investor, liquefy or exit a deal like that if they decide, a year or 2 years in that they decide, it's just not what's best for them and they want to liquefy their money?
There are a number of ways. So you and I, if we decided that I wanted to sell my tokens or trade my tokens, I could approach you and say, Whitney, I've got $10,000, one token, or I've got $50,000, 5 tokens. And would you be interested? This is what, the cash flow is. This is what all the rest of it is. And so if you said, yes, I'm interested in that, we agreed that the price was $50,000, $55,000. All I have to do is put up the tokens, and all you have to do is put up the money, and the smart contract automatically allows it to go directly through. So there's no trading fees with that. So it's a really cool thing. You might have to pay a little bit for what they call know your customer and anti-money laundering. So it's basically like doing a credit check. But other than that, that trade goes right through. They could also go to a broker, so a securities broker or a broker dealer, and list their securities with a broker dealer. There is also right now in the U.S., I think there's close to 25 or 30 of these things called ATSs, which is automatic trading systems. And those are regulated trading systems run by securities brokers. And it's basically like a matching service. So for a really crude analogy, it's like the Tinder of security tokens or the Tinder of digital assets. It'll put the digital asset up, and if somebody else is interested in it, you can match and do that. And then the next and the best thing is there's security token exchanges that are popping up where you'll be actually able to list your security tokens on an exchange and sell them. And some of the other larger crypto exchanges like Coinbase and some of those guys are now working on also selling and being regulated to sell security tokens. So you could list them there and you'd get some liquidity there. So it opens up a lot of forms of liquidity. I'm not going to say that these are, going to be, crazy super liquid, but at the other point, it opens up a lot more than you currently have right now, and a bunch more options for the investor, like I said.
Definitely a whole new world I'm going to have to learn more about. I've barely skimmed the surface, and here you've brought up all these points. I'm like, okay, this is making more and more sense. I'm going to have to learn more about this. But what's the most challenging part of setting up this security token fund and executing something like that?
The most challenging part for us was to make sure we had the right legal structure. But the actual worst part of it was setting up the fund so that foreign investors and non-U.S. investors can invest in it. What we probably should have done last year was just launched as a U.S. fund, and then done a follow-on with the non-U.S. fund, which is exactly where we're at right now. But at the time, we didn't know what we didn't know. And so that's been the biggest challenge of it. And then the other thing is just kind of getting up to speed because sometimes people use different terminology for the same thing. So I always say, and it's what I've learned in real estate, and I guess I've gotten more confident. It's like, I'm never afraid to ask. And so it's like, can you just explain that one more time to me? Or what are you trying to say here? And it's easier for me now just to say to these technology guys, can you just, speak a little bit slower and pretend that I don't speak English? And also, I'm a real estate guy and don't do math. So just, try and explain it to you. But I've just finished up an article that I'm going to publish that kind of goes through the whole process of it and is a good introductory. And we also have a report on our website that kind of talks about real estate on the blockchain and some of the opportunities that, so it's a little bit of a, knowledge curve, but I don't think it's insurmountable for anybody. And I believe by the end of 2021 or 2022, most people will be able to understand the basics of it just because it'll start getting more and more commonplace.
What about preparing for a downturn with a fund or real estate on the blockchain?
This really shouldn't be affected by any type of downturn. I think the preparing for the downturn is going to be based completely on the underlying asset. So this is just a different way to hold the shares and receive the income. It's not going to, I can't say that with, absolute guarantee, but if you've got a quality asset that's backing, it's basically the same thing. If you've got a quality company backing a stock or bond, or if you've got a quality sponsor with a quality, piece of real estate, those are going to weather the storm. And I can tell you that because I've been through, 4 downturns now. And so you kind of get an idea as to who knows what they're doing and, what type of properties do well and what type of properties don't do well. And, there's certain things that I'm not going to do at all right now. And what I really like about net lease properties is they continually, year in, year out, have always weathered the storm. Like I say, they're probably in a little play on my name, they're a flight to quality. So when everything else is burning down, a lot of the smart money goes in it shouldn't say dumps, but they place their money into net lease properties because it's a great place to hold their money, great place to preserve their assets and their wealth and generate income.
Well, knowing that you've been through 4 downturns, what's your prediction for the next 6 to 12 months in the real estate market?
I'm not going to predict anything. So But really the prediction is that everything depends on what the government does, and everything depends on what public perception is. So if public perception, if the government doesn't shut down, states anymore, and the government doesn't shut down businesses, and the government kind of allows things to open up and people to make their own decisions about their health, then I think that we're going to have a really successful economy. The other thing is that people's perception of safety. So if people perceive that the vaccines and there's enough people that have COVID that they want to venture out and do normal things. I mean, I personally never stopped doing things. I even, in October of last year, went to Dubai. For a conference, but, people right now, I can see that I just was on a call last night with some guys, and, 3 of them said, oh yeah, we've got our vaccines now, so we're going to start traveling. So I think that's going to be very good for, the travel industry, the airlines, hotels, restaurants, and everything else. So my prediction is that as soon as the news media stops talking about bad news, and we can, or just, actually just ignore the news media, and we're going to have a great future.
Yeah, no, that's great advice. I don't know if they're ever going to stop talking about bad news, unfortunately, though. They're going to find it one way or the other, or make it up, right?
Just completely ignore the news media, and your life will be happier and you'll be way more productive.
I agree. Well, Michael, do you have any daily habits that you are disciplined about that have helped you achieve success?
I really, every morning I get up, I typically get up around anywhere between 4:20 and 4:45 a.m. And it's just a habit, and I get the most stuff done at that time. But I do, meditation, I do Bible study, I do prayer. And the biggest thing is I just thank God for everything that I've got in my life, and just even the simple little pleasures, like I'm up here in Chicago in the middle of winter. I thank God for heat in the house and a nice warm blanket while I'm doing it. So, but gratitude is a major thing. And I don't like to call it giving back, but I do like to say that people should have a purpose. And so that's why I've gotten involved with different nonprofits, including the human trafficking, because I think human trafficking is not a harsh enough word for it. It's actually human slavery.
Yes.
And there shouldn't be any human slavery. So I think that, the biggest thing is my morning routine. And then the other thing is being thankful. And then the next thing is having a purpose. And, my purpose right now is to, create worldwide access to high quality real estate investments that generate wealth and create human flourishing.
I love that answer. And I love how you talk about human slavery. It definitely is what it is. And it's horrible, horrible, horrible. And I'm grateful for you, having that purpose in a big way. A couple more questions quickly, though. What's your best source for meeting new investors right now?
They can come to our website, and if they want to, they can download our special real estate on the blockchain report, and that'll put them onto our email list. And when we're ready to launch, we'll be having a few webinars, and they will be included on that. It is a 506c offering, which means we have a limit to investors. So we're limited to 2,000 U.S. investors, and one of those investors is the non-U.S. fund. So we can only take on 1,999 investors. So it's a limited offering, and we think it's really exciting. But go to our website. They can also contact me at hello@libertyfund.io. And as I said, I'm really most interested in educating other syndicators about this opportunity, because I think that the more people understand it, the more people are going to do it. And then the more, people will just be used to it. And it'll just be standard, right. It'll bring costs down. So
what's the number one thing that's contributed to your success?
Persistence and positive attitude. So I guess that's two, but, I'm going to say one more thing. Ignorance, because I didn't always know what I should have known, so I just went ahead and did it. So,
yeah, you took action. That's for sure. Well, Michael, it's been a pleasure to have you on the show. Pleasure to meet you finally. I know I've seen you all over the place as well, and pleasure to meet in person. And why don't you share? Can you share with the listeners how to get in touch with you? I know you shared about where to get your white paper and your newsletter. You want to mention that one more time, where that is, or your website?
All right, the website is libertyfund.io. It's libertyfund.io. And at the top, there's a button for the special report. They can also contact me at hello@libertyfund.io. Or if they're interested in investing right away, they can go to investor@libertyfund.io.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.